People in the government may think that Canadians are probably too busy with our daily lives to understand or notice the fiscal cliff we're zooming towards. That sense that something is deeply wrong with our economy. But we definitely feel it. And while Ottawa tries to confuse you with information that's sometimes hard to understand, Canada is definitely testing the edges of a financial debt spiral. Forget the economy. It's about your money and your future, and today we're going to expose the whole truth. For the past 10 years, our government has been on an unprecedented spending spree, and the bill is finally coming due. Canada's federal budget has nearly doubled in the last decade, skyrocketing from about $612 billion to over $1.2 trillion. And under the leadership of Mark Carney, who promised a new era of fiscal responsibility, what did we get? A plan to spend even more, at least that's what it looks like. The government's own numbers show a deficit of $62 billion in the 2023-24 fiscal year, a massive jump from the $35 billion the year before. The PBO, or the Parliamentary Budget Office, is now forecasting a deficit of $68.5 billion for this year alone. There is no credible plan to balance the books. And for anybody who remotely understands economics, knows how quickly interest costs crowd out everything else when growth is weak and borrowing costs stay elevated. Rising deficits and soaring debt charges are the textbook precondition for a fiscal squeeze that erodes room to maneuver the economy during a downturn or a trade shock. And guess where we are with the US right now? In a trade shock. And yet, the so-called experts in the room now suddenly want to take on more deficit in the medium term. You heard that right. The new government that was supposed to bring fiscal sanity to Ottawa is telling us that the way out of a debt crisis is to go deeper into debt. Mark Carney is trying to sell you on a capital budget and an operating budget, which, by the way, is a classic accounting trick to hide the true scale of borrowing. He says he'll balance one while running a small deficit on the other. But a deficit is a deficit and debt is debt. It's an insult to your intelligence. They are borrowing from your children's future to pay for their political promises of today. Now, debt by itself is not bad, but not having a clear means to repay definitely is. For Canada, this math only works if productivity improves and projects we invest in return more than they cost, which is not what we are currently doing and what current data trends show. Another very interesting thing you'll hear the apologists say is, but our debt to GDP ratio is way better than the G7 nations. This is one of the most intellectually dishonest arguments they make. It's like saying you're the skinniest person at the sumo wrestling tournament. Each economy is different. Each country has a different ability to carry and service its debt load. Comparing Canada to the US or European nations is nonsensical. The US has the world's reserve currency. We don't have that luxury. Economic shocks can easily spill over and drag us down with them, making our situation even more precarious. We need to look at our own fundamentals, and unfortunately, what they show is a nation on an unsustainable path. A lot of countries have learned the hard way that complacency is not a plan, and delaying difficult decisions only makes them worse. And here's the part they don't really want you to clearly see because you'll join the dots immediately. While our government has been borrowing and spending, the Canadian economy has been getting less and less productive. Canadian productivity has declined in 9 of the last 10 quarters. Think about what that means. For every hour someone works, our economy is producing less value than it did before. Canada's productivity is sliding at precisely the time we need it to rise, which means we're borrowing more to produce less per hour worked, and that is definition of a dangerous spiral. When productivity fails and unit labor costs rise, inflation pressures reignite or margins compress, investment stalls, and the tax base erodes, all while debt service costs ratchet higher, compounding the fiscal stress. And as if our internal problems weren't enough, we are now facing a major blow from US tariffs. These tariffs on everything from steel and aluminum to a range of consumer goods are a direct threat to key Canadian industries that rely on the American market. Our leaders have failed to secure the most important trading relationship we have so far. And because of that, Canadian businesses are facing higher costs, reduced exports, and the threat of job losses. Industries in places like Ontario's automotive sector and British Columbia's lumber communities are on the front lines of this economic war. This external pressure is hitting an already weakened economy and making us incredibly vulnerable. Canada's countermeasures may temporarily try to shield critical sectors and provide remission relief, but no set of band-aids can fully offset the lost competitiveness and hesitancy to invest when executives cannot even model their input costs or export access with any level of confidence. So, what would a sanity plan look like if we were serious about this? First, a real fiscal anchor that survives election cycles. Cap program spending growth below nominal GDP until the debt to GDP ratio is on a clear downward path, and publish a binding path to some form of balance over a defined horizon. No gimmicks and no carve-outs, that's just crazy. Second, focus borrowing strictly on projects with measured, bankable productivity returns, things that actually raise output per hour, paired with transparent audits to stop the habit of calling consumption investment because it polls better. Third, accelerate pro-productivity reforms, streamline approvals, modernize interprovincial trade, deregulate choke points in housing, energy, ports, and digital infrastructure, and make Canada the most predictable jurisdiction for capital formation in the G7 instead of the slowest. Fourth, stabilize the trade with the US by pursuing targeted sectoral arrangements and time-limited relief that keeps integrated industries, autos, steel, agri-food, aerospace, functioning while bigger disputes are resolved, because losing permanent productivity now will lock in lower productivity for a decade from now. And let's also be precise about what a spiral means in fiscal terms. It's when rising interest costs and weak growth cause deficits to widen even without new spending, forcing more borrowing at higher interest rates, which further squeezes program space and undermines confidence, creating a feedback loop that is hard to escape without austerity or surprise growth. Now, Canada is not on that spiral today, but we should be absolutely alarmed. The direction we are traveling in is wrong, and pretending that the warning lights aren't flashing is how countries sleepwalk into crisis they could have avoided with earlier course corrections. The more credibility we lose with markets and businesses, the higher the risk premium we pay, and more painful the eventual adjustment will be. Now, some will insist that the G7 comparison proves that everything is fine. Call their BS as it is. Here's the bottom line. Canada needs growth, not just government spending dressed up as growth. And growth comes from productivity, competitiveness, and confidence in stable rules, not from pushing today's bills onto tomorrow's taxpayers. If Ottawa wants to protect workers, protect the industries that employ them by lowering trade uncertainty and accelerating domestic competitiveness reforms. That is how you bend a curve away from disaster and back towards prosperity. This isn't a game, it's about people's lives. The combination of a rising deficit, falling productivity, and external trade shocks has set Canada on a path of extreme peril. The government must focus on fixing the problem rather than actively making it worse. Maybe they're counting on you to be uninformed and distracted, but we're not. We see everything, and it's time to demand fiscal sanity not just for you but for your children as well. Thanks for watching, and I hope some common sense prevails.